Welcome. In this video, when will ZBCN coin fall and we will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. Looking at a notable structure on the chart, we can see that the price has started to form a double top pattern quite clearly. This technical structure is often considered a turn signal in the markets and is one of the formations that traders should pay serious attention to. The price has already risen to a certain level, followed by a pullback and then a second peak, reaching the same level again. However, this second breakout may have been supported by less volume than the first one, which could be an important clue that buyers are starting to weaken and selling pressure is increasing. One of the important details in such patterns is the support line that forms between the two peaks. In other words, the bottom that the price forms between the two peaks is also considered the neckline of the pattern. If the price declines to this neckline and breaks it to the downside, the double top pattern is completed in technical analysis, and the downtrend usually tends to deepen after this breakout. At the moment, it can be seen on the chart that the price is starting to retreat step by step towards this line. If this support point is broken to the downside, selling pressure is likely to increase. The basic logic of the double top pattern is that the market's upward movement reaches a saturation point, and sellers step in as buyers lose their strength. The first peak is usually the area that the market tests and meets resistance there. The second peak indicates that despite retesting this area, the price is unable to go any higher. This signals a strong selling reaction in the market. This pattern is also very meaningful in terms of investor psychology. Having seen the first top, traders often get excited during the second top and expect new highs. However, when the price pauses here and starts to fall again, they reconsider their positions. This can lead to increased selling, which in turn can cause the price to retreat more quickly. At this point, the market reaches a turning point. Either this support zone is broken, confirming the decline, or the price rebounds from it, invalidating the pattern. At the moment, it is clear that the price is slowly starting to trend downwards after the second top. This trend could be a correction, or it could turn into a larger downtrend if the support point is broken to the downside. Moreover, the fact that the decline is slow and without volume suggests that this pullback may encourage more investors to exit the market, which could trigger a second wave of selling that would accelerate the decline. The double top pattern is one of the most reliable patterns in technical analysis, and the target is usually determined by measuring the distance between the peak and the neckline in the same downward direction after the neckline is broken. In other words, a further decline is expected by this distance. If this distance covers a significant area on the chart, then the market may see a strong correction in the coming period. Therefore, it is important for traders to be cautious and carefully analyze whether the pattern is complete or not. In addition, the double top pattern generates more effective and reliable signals when observed on larger time frames. If this pattern is formed on a long-term chart, the bearish potential can be much more serious. In such cases, traders should tighten their stop-loss levels and adjust their risk management accordingly. On the other hand, it is also possible that the price may move in a way that negates this pattern. In other words, even if the decline started after the second peak, if the price rebounds and makes new highs above the second peak, this pattern will be canceled, and then the uptrend can be expected to continue more strongly. However, in the current structure, there is no strong impression of this scenario yet. On the contrary, the downward movement of the price suggests that this structure remains valid in terms of technical analysis. As a result, the structure on the chart is one that traders with technical analysis knowledge often follow and can have a strong impact on the price when the pattern is completed. For now, the double top pattern has taken shape and the price has started to be pressured to the downside. If this pattern is technically completed, that is, if the price breaks the neckline down, it may be inevitable that the sales will accelerate and the decline will deepen. For this reason, both short-term traders and medium-term investors should carefully monitor this technical development and shape their positions accordingly. But we cannot decide the analysis only with the pattern. Let's look at other metrics. Keep watching.
One of the key technical formations that stands out on the chart is the price's movement along a clearly defined upward trend that has been in place for a considerable time. Such trends are generally viewed as technical signals, indicating that market participants share a common consensus on direction and that buying pressure is stronger than selling pressure. However, a notable aspect of the current situation is that the price has started to distance itself from this upward trend line. In other words, instead of closely following or touching the trend line, The price is now positioned significantly above it. Technically, this could signal a potential cooling off of the price, a pullback toward the trend line, and the possibility of a short-term correction. Trend lines serve as important reference points in the markets, helping investors identify dynamic support and resistance levels. In upward trends, it is considered a healthy market behavior for the price to occasionally pull back and touch the trend line before continuing its upward movement. However, if the price remains far from the trend line for an extended period and continues to rise independently, the likelihood of a technical pullback becomes more prominent. This not only reflects the need for the price to take a breather, but also suggests that the market requires a correction to maintain sustainable growth. What we're observing now points precisely to this kind of scenario. While the price maintains its upward trend structure, it has moved noticeably away from the trendline support. This is a signal that short-term traders, in particular, should pay close attention to. In such cases, a relaxation, a pullback in the price toward the trendline is technically quite natural and expected. Therefore, under current conditions, the possibility of the price retracing toward the support line should not be overlooked. Trend lines also represent the psychological boundaries of the market. When the price strays too far from the line, it may indicate that buyers are losing strength, becoming exhausted, and that selling pressure could gradually start to emerge. A return to the trend line can thus be interpreted not just as a technical correction, but as the market's attempt to rebalance itself. This should be seen as a perfectly normal and even healthy development in a rising market. If the price experiences a pullback at this stage, and that pullback continues down to the trend line, it should definitely not be perceived as a negative signal. On the contrary, a bounce from this line could show that the uptrend remains intact and that the price may gain new momentum in the same correction. The key point is that the price does not fall below this trend line and that it acts as support. In this case, new buying opportunities may arise, allowing the uptrend to continue in a sustainable way. On the other hand, it's also possible for the price to make new upward moves without approaching the trend line. However, in such a case, it's important to monitor whether the upward movement is losing momentum. Prices that remain distant from trend lines often exhibit a tendency toward mean reversion, a return to the average, over time. In such cases, especially short-term traders may prefer to wait for the price to approach the support line before entering positions. This can lead the market to enter a period of consolidation or mild correction. This technical outlook also offers valuable insights for medium and long-term investors. To determine whether an uptrend will continue, it's crucial to closely observe how the price interacts with its support line. Every time the price moves away from this line, it becomes important to see whether new buyers will step in and whether existing investors will maintain their positions. If trading volume remains low and the price approaches the trend line, the market's reaction at the support level could become a key threshold in determining future direction. In conclusion, although the rising trend structure observed on the chart points to an overall upward direction in price, the fact that the price has moved significantly away from the trend line brings the possibility of a technical pullback into focus. This is a very natural and expected process from a market perspective. A move toward the trend line could provide investors with more favorable levels for new positions. However, the most critical point to watch in this process is whether the price will fall below the trend line. If it manages to stay above, the uptrend can continue with renewed strength. Otherwise, breaking below this rising structure could bring short-term downward pressure into play. Therefore, it is essential for technical analysts to closely monitor these types of details and be prepared for potential scenarios.
One of the most important technical indicators on the chart is that the price is currently positioned just above the 200 EMA exponential moving average level. The 200 EMA is considered a highly critical level, especially for medium and long-term traders. This is because this average is often a key reference point for determining the direction of the trend and the overall trend of the market. Traders consider it a positive sign when the price stays above this average. It means that buyers are still in control and the market is determined to continue its upward trend. The fact that the price is currently touching the 200 EMA shows how important a support point this level is. Such contacts are considered to be very sensitive and critical moments in terms of technical analysis, because if the price manages to hold at this level, that is, if it stabilizes here without dipping below the 200 EMA, this indicates that the market is facing strong support and the foundations for a possible bullish move can be laid. The 200 EMA is not only a technical line, but also a marker of the emotional and psychological boundaries of the market. Large traders, especially algorithmic traders, take this level into account when creating buy or sell strategies. Therefore, when the price hits this level, there is usually an increase in volume. The fact that the price is currently touching the 200 EMA may indicate that big traders are actively monitoring this area and preparing to shape their trading strategies accordingly. In such cases, whether the price can stay above the 200 EMA plays a key role in determining the direction of the market going forward. If the price receives an upside reaction from this level and is able to move higher again, this is considered a signal that the uptrend could continue strongly. At this point, new buyers can be expected to enter the market and accelerate the bullish momentum. This would paint a positive picture for both short-term and long-term investors. On the other hand, if the price breaks the 200 EMA downwards and starts to stay below this level, it is possible to say that the technical risks are starting to increase. If this scenario materializes, the price may enter a downward correction wave, or the current uptrend may come to an end for a while. For this reason, the current touch point represents a zone where investors should be very careful. In technical analysis, closes above the 200 EMA usually imply the dominance of the buy side in the market and the continuation of the bull market. Therefore, traders usually prefer to hold or open new positions above this line. The fact that the price is currently at this critical level suggests that we are at an extremely important threshold in terms of determining a new direction. If the price stays at this level and moves upwards, it will increase confidence in the market and may attract the participation of a wider investor base. On the other hand, in case of a sustained move below this level, the 200 EMA may stop being support and start acting as resistance. This could lead to increased selling pressure. Such turning points could be the first signs that the market is starting to signal a change in direction. However, in the current situation, no such breakout has yet occurred and the price is still positioned above the 200 EMA. This suggests that bullish expectations are still valid and the price may find support at this level. The 200 EMA is also of great importance in terms of market psychology. Since many traders and algorithms use this average as a key signal, the impact of developments at these levels is far-reaching. For this reason, it would be appropriate for investors who maintain their existing positions and those who are considering opening new positions to act according to this critical level. As a result, this moment when the price touches the 200 EMA is the decision moment in technical analysis, can be characterized as the uptrend. The price reaction from this level will provide strong clues as to whether the trend will continue or not. If this support line holds and the price makes a strong bounce from here, there could be more confidence that the bull market will continue in the medium to long term. However, in the opposite scenario, that is, if the price breaks below this level and fails to hold, the market could enter a period of short-term corrections or deeper selling. Therefore, price behavior at an important technical level such as the 200 EMA may be so critical that trading strategies should be reconsidered.
The 200 EMA shows us long-term trends.
Yes, friends. I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.